Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a story that's been making waves in the financial sector. The European Central Bank has signaled that it may consider a rate hike in June, while the Bank of England is also considering hikes of its own. This news comes as central banks around the world are adjusting to a new reality of elevated inflation and supply chain disruptions. According to reports, President Christine Lagarde has indicated that the ECB will take a closer look at raising interest rates in June, citing concerns about inflation and the need to normalize monetary policy. Meanwhile, the Bank of England has decided to leave rates unchanged for now, but its rate setters are considering hikes in the coming months. This shift in tone from central banks is having a ripple effect on markets, with investors scrambling to adjust their portfolios in response to the potential for higher interest rates. We've seen a surge in debt sales in recent weeks, with companies like Meta Platforms and SoftBank's OpenAI raising billions of dollars in high-grade bonds and leveraged loans. But not everyone is convinced that this borrowing binge is sustainable. Some experts are warning about the risks of over-leveraging, particularly in the tech sector, where companies are taking on massive amounts of debt to finance their AI ambitions. We've also seen some high-profile defaults and bankruptcies in recent weeks, including FreshRealm, the exclusive maker of meal kits for Blue Apron. As we navigate this complex landscape, it's essential to stay informed and adapt to changing market conditions. On the Riskwiser Zone, we'll be keeping a close eye on these developments and providing you with expert analysis and insights to help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where the latest developments can have a significant impact on global markets. Today, we're looking at the upcoming monetary decisions and economic indicators from around the world. In Europe, several central banks are set to make key decisions that could shape the region's economic trajectory. The Swiss National Bank is expected to keep its interest rates unchanged, while the Norwegian Central Bank may pivot towards tightening. Meanwhile, the Czech Central Bank and Serbia's Monetary Authority are also scheduled to make decisions on borrowing costs. In Latin America, Chile's GDP proxy readings are anticipated to show a slight expansion in March, but analysts have cut their 2026 growth forecast. Brazil's central bank minutes may provide insight into the board's decision to deliver a second straight quarter-point cut, while Mexico's inflation readings could lead to another rate cut. The U.S. Federal Reserve is also closely watching global economic developments, particularly in light of the ongoing conflict in the Middle East. The impact on oil prices and inflation expectations will be crucial in shaping monetary policy decisions. It's essential to stay informed about these developments, as they can have far-reaching consequences for investors, businesses, and individuals alike. As we navigate this complex landscape, it's crucial to remain vigilant and adapt to changing circumstances. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at the latest market news. We've got a lot to cover, from oil prices to stock movements, so buckle up. First off, oil has risen for the second consecutive week due to the ongoing U.S. blockade in Iran. With President Trump sticking to his naval blockade of Iranian ports, concerns are growing that the Strait of Hormuz won't reopen anytime soon. This has led to a significant increase in oil prices, with Brent rising above $111 a barrel and West Texas Intermediate nearing $105. In other news, the yen has seen its biggest rise in 2 years after Japan intervened in the foreign exchange market. The Japanese government reportedly bought yen and sold dollars, causing the currency to surge 3%. This move was likely made to stabilize the currency and prevent excess volatility. Meanwhile, in the stock market, SanDisk's stock fell 5% despite strong earnings results. The company reported beats across the board, but investors may be locking in profits after a powerful rally that drove the stock to record highs. On the other hand, Moderna's stock jumped 7% after the company reported better than expected COVID-19 vaccine sales internationally. We also saw some significant movements in other stocks, including Alphabet and Amazon. Additionally, Japan's Nikkei newspaper reported that the Japanese government intervened in the foreign exchange market to stabilize the yen. It's been a wild ride in the markets today, folks. Remember to always stay informed and adapt to changing circumstances. As we close out today's show, it's essential to keep in mind that investing always involves risk. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.